This is a podcast from the Business Times.
Good evening. It's Thursday, July 9th, 2026. Here's your market-focused daily closing bell update by the Business Times. Asian shares traded mixed today after the early rebound in semiconductor stocks lost steam, while a sharp rise in oil prices fueled renewed inflation concerns and weighed on global bond markets. Oil prices climbed for its third consecutive session after the U.S. carried out another round of strikes against Iran. U.S. President Donald Trump declared an end to the temporary peace deal with Iran yesterday, but later added that he did not expect the situation to escalate into a full-scale war, which helped calm the markets. Brent crude futures gained 1% to $78.85 a barrel, after briefly climbing above $80 a barrel overnight for the first time since June 22nd. U.S. West Texas Intermediate futures gained 1.06% to $74.29 a barrel. Back in Asia, MSCI's broadest index of Asia-Pacific shares outside Japan erased earlier gains and fell 0.2% as the rebound in chipmakers earlier in the day lost momentum. South Korea's Kospi soared as much as 4% after retreating to a bear market yesterday, but soon after reversed course and closed slightly higher at 0.62%, as early gains in Samsung and SK Hynix fizzled out. The South Korean chipmaker SK Hynix is also set to start trading in the U.S. tomorrow. Sources from Reuters said the $28 billion U.S. share sale was more than 7 times oversubscribed. Over in Japan, its Nikkei index closed higher at 1.3%, while the Topix rose 0.36%. Japan's benchmark 10-year government bond yield climbed to a nearly 30-year high yesterday, reaching 2.88%, as higher oil prices revived inflation concerns and investors remained cautious about the country's fiscal outlook. Yields have been trending higher since the government unveiled an ambitious spending plan in its policy blueprint last month. The plan also called on the Bank of Japan to align monetary policy more closely with the country's growth agenda, raising concerns that political pressure could keep interest rates lower for longer, even as inflationary pressures continue rising. Elsewhere around the world, Spanish stocks and bonds came under pressure yesterday after U.S. President Donald Trump called for the U.S. to cut trade ties with Spain, escalating tensions over defense spending and the Iran conflict at the NATO summit in Turkey. This is not the first time the U.S. president has taken aim at Spain. He had earlier threatened a full trade embargo during the U.S.-Iran conflict in March, after Spain refused to allow the U.S. military to use its bases for operations linked to strikes on Iran. Despite the rhetoric, trade between the two countries has continued without disruption. The broader European markets, however, are poised for a stronger open, with pan-European stock futures up 1%. Finally, U.S. futures all point to a firmer open, despite renewed geopolitical tensions. The S&P 500, Dow, and NASDAQ 100 all rose at 0.3%. 0.15% and 0.61% respectively. That's it for today. For more business news and market updates, visit bt.sg and Lens on Daily for the latest tomorrow at 10 a.m.
This is a podcast by the Business Times. Find more BT podcasts at businesstimes.com.sg/podcasts or wherever you get your podcasts. This podcast is meant to provide general information only. SPH Media accepts no liability for loss arising from any reliance on the podcast or use of third parties' products and services. Please consult professional advisors for independent advice.